Hello, good evening, everyone. Thank you for joining us this Wednesday or Thursday evening for the webinar titled First Metro Exchange Traded Fund 2024 Mid-Year Market Outlook. So it's the perfect way to kick off the second half of the year. But first, let me know if clear po ba ako on your end. Kindly type C. Kindly type C if clear po ako on your end, or kindly type U if hindi po ako clear. Let me know. Type C if clear po ako on your end, or type U if unclear. Okay, thank you so much for your feedback. So before I start, let me just introduce myself. I am Monneth Pangatungan, Visayas Business Development and Market Education Officer of FirstMetro Securities. It is the stock brokerage arm of the Metro Bank Group. And our company is dedicated to promote financial literacy and create awareness on investment opportunities to empower individuals like you and me and even institutions to attain their financial goals. And we envision to be the largest and most trusted Philippine investment solutions partner. It is my honor and pleasure to be your host this evening. So just like this event, we used to conduct our sessions on site and face-to-face. However, due to pandemic, we shifted to a webinar format, and we are still glad that we are regularly invited by private institutions, public institutions, and even academic institutions. That's on top of our monthly webinars, just like this one. So it's really amazing how technology enables us to add value wherever you are located. So as of year to date, we have conducted over 200 talks already all over the Philippines. And we also acknowledge that this is the current demographic of stock market investors in the Philippines as of 2023. So this is based on the PSE data. So for a country of over 100 million, so now we are at 1.91 million stock market investors. So still roughly 1% out of the 115 million. So most of the investors at 1.5 are online accounts, and around 74% are actually locally employed. So majority are still from Metro Manila. So before it's around 80%. But right now, I think it went to 84%. And then in Visayas, last year, we are at 3%. Currently, we are now at 6.5%. So how about you guys? Do you have stock trading or investment account already? Kindly type yes or no. Anyone who have an investment account, a FirstMetroSec account? Oh, we have one participant that still doesn't have a FirstMetroSec account. Okay, so you might consider after listening to all of the talks for this evening's webinar. So for this evening, for the existing or even to those not yet investing in the stock market, our webinar this evening will be perfect for you as we will discuss about market outlook and FMETF. So we figured it would be best to tag expert along. That's why we have guest speakers. Yes, so dalawa siya from First Metro Asset Management Inc. to discuss about the market insight and discuss more about exchange-traded funds. So we are so honored to have these two distinguished guests for this evening. So probably you are already excited to learn a lot of things today. So if you have questions during the presentation, feel free to ask in the Q&A of the Zoom panel. So we will answer them later during the Q&A portion after the presentations. Okay, so let's start with our first speaker. Let me introduce Reginald Reyes. He is a portfolio manager in First Metro Asset Management Inc., handling the fixed income mutual funds, both dollar and peso denominated, including the fixed income portion of the balanced funds. He has over 10 years of experience in the fund management industry as a fixed income fund manager in Security Bank, Trust, and Asset Management Group, and as a trader in RCBC Trust and Investment Group. He graduated with honorable mention from De La Salle University, Manila in 2012 with a bachelor's degree in physics, minor in finance. He is also a CFA or chartered holder since 2018. So let's all welcome Reggie. Take it away, Reggie. I'll stop sharing.
Hi, good evening, everyone. So let me share my screen. So again, good evening, everyone, and I hope everyone's having a good evening and a great day. We saw the market today reach the 6,500 level. So for today, I'm just here to give a review of the market for the first half of 2024 and our outlook for the remaining second half. So for in terms of the first half of 2024, the market was relatively flat, where the PSEI closed at the level of 6,411, or 0.59% lower compared to its previous close in 2023 of the level of 6,450. And then actually in the first quarter, it reached a peak of 6,979, or returning 8.21% in terms of year-to-date performance. This was due to the backdrop of positive outlook for the Philippine economy, as well as solid corporate earnings of our local companies. However, since then, it trended downwards amid inflation concerns, and then lower than expected GDP, as well as some changes in the monetary policy outlook of the BSP. But in terms of our ASEAN peers, we are not the only underperformer in the market. Our year-to-date performance of negative 0.59% was slightly higher compared to other ASEAN countries, such as Indonesia, where they saw negative 2.89% return in their local stock market, as well as in Thailand, where they saw negative 8.11% amid political tensions and some concerns over inflation and growth. In terms of the local currency or the peso, in the first quarter of 2024, we were actually one of the better performing currencies, where the peso only depreciated by around 1.5% versus the dollar. However, after some divergence in the monetary policy trajectory, which BSP Governor Romolona has actually stated that we may cut policy rates ahead of the Fed. This prompted the peso to sharply depreciate by around 4% in the second quarter, and even breaching the 58 peso handle. Currently, it's trading at around 58.60 to 58.9 levels, which still pose some concerns for, especially for foreign investors. So in terms of foreign outflows for the local stock market, at the start of the year, we actually saw some buying momentum in the local index, where foreign investors had been net buyers, peaking at a net foreign inflow of $261.3 million. But since then, we have seen continuous foreign outflows in the second quarter, with the current year-to-date net foreign outflow reaching $527.4 million as of June 28. This is actually higher compared to the net foreign outflow with experience in the same period of 2023, reaching an outflow of $467.3 million. So what actually fueled this weakness in the first half for the Philippine stock market? So first, recall that in from 2022, both the Fed and the BSP raised their policy rates, with the Fed raising their rates by 525 basis points, while for the BSP, they raised their policy rates by 450 basis points. This was done in order to tame inflation levels we have not seen since 2008. Additionally, the interest rate differential between the two policy rates has been around 200 basis points, or around 200 to 250 basis points. However, this interest rate differential has actually narrowed to around 100 basis points due to aggressive interest rate hikes by both the Fed and the BSP. And in turn, this also actually put pressure on our local currency. So in terms of bond prices, actually, compared to the 2023 year-end levels, we saw a bull steepening in the local bond yield curve, where yields in the longer end or the longer end of the yield curve, so around 10 years and above, rose higher compared to yields in the short end, with yields increasing as much as 100 basis points, reflecting the higher for longer rhetoric of the BSP or the central bank. And this was also evident. So here I'm showing the 10-year local bond yields, where it actually reached a low of 6% during the end of 2023 due to optimism that both the Fed and the BSP will cut their policy rates as early as the first quarter. But since then, changes in the outlook caused yields to rise sharply, where the local 10-year yield actually reached as high as 7%, retracing that high mark we saw at the latter part of 2023. So in terms of inflation concerns, the local inflation for the Philippines averaged 5.8% in 2022 and 6% in 2023, both well above the government's target range of 2 to 4%. This is due to supply chain issues and intensified geopolitical tensions, such as the Russia-Ukraine war, which caused commodity prices to be elevated. Since then, inflation has been trending downwards from the highs we've seen in the early 2022 and in early 2023, and has been within the BSP's target range of 2 to 4%. However, due to still ongoing inflationary pressures, mainly elevated prices of crude oil and rice, to be specific, inflation proves to be sticky, and with the latest inflation data print at 3.9% in May, which is still teetering on the upper end of the BSP's target range, despite having high base effects from last year. Also, for US inflation, it continues to be well above the 2% target of the Fed, and the Fed continues to be hawkish in terms of their monetary policy, given that the US labor market continues to be strong. We're seeing non-farm payroll numbers still above market expectations, and unemployment rate continues to be low. And this was also the higher than expected first quarter GDP in the US also contributed to the hawkish rhetoric of the Fed, given that consumer spending continues to be resilient. So several Fed officials continue to be hawkish, stating that they will remain data driven, waiting for more data points to prove that inflation is coming off from their historically high levels and that the economy is cooling down. So in terms of policy rate expectations, early on this year, the market was actually pricing in an early Fed rate cut as early as the March FOMC meeting. However, that rate cut optimism since then has diminished, given that US inflation remains elevated and not shown any significant signs of slowing down near to the 2% Fed target level. And recently, the Fed Chair, Powell, noted that it will likely be appropriate to lower interest rates sometime in the latter part of this year. And they reiterated the need for more confidence that inflation rates are moving towards their 2% goal before they start cutting their policy rates. So in terms of first quarter earnings for the local companies, it was actually a mixed bag where the growth actually came from the banking sector, which posted strong earnings due to healthy net interest margin expansions, given that we are still in a high interest rate environment and loan growth has been expanding, as well as consumer companies' growth were actually more coming from margin expansion. However, in the latest consumer expectation survey, consumer outlook for the current and next quarter has actually declined. But it remains unchanged for the next 12 months. The near-term pessimism for the consumer confidence actually mainly stemmed from concerns over high inflation and expectations of lower incomes and fewer available jobs. So consumers expect inflation to remain elevated in the next 12 months. Although June note that this survey was done prior to the announcement of Executive Order 62, cutting the import tariffs on rice from 35% to 15%. So we do expect the consumer outlook to improve in the next few months. And in terms of what has pushed inflation to elevated levels, it was actually more on commodity prices. And in terms of the local inflation, in terms of food inflation, it was mainly the price of rice, which drove higher inflation for the Philippines. So although the prices of rice have stabilized recently, it is still almost twice as the amount versus 2 years ago. But given the said Executive Order 62, where the government lowered the tariffs on imported rice from 35% to 15% until 2028, and including other agricultural products, the economic managers of President Marcos believes that this could potentially bring down the price of rice to as low as 29 pesos a kilo, which should also alleviate inflation in the next few months. So in terms of our growth outlook for the Philippines, so in 20, despite seeing red hot inflation last year and there are some external pressures, some geopolitical uncertainties, the Philippine economy continues to post robust economic growth as it registered the fastest growth for full year 2023 at 5.6% versus its ASEAN neighbors such as Indonesia posting 5%, Malaysia at 3.7%, Singapore at 1.1%, Thailand at 1.9%, and Vietnam 5%. So even though this growth of 5.6% last year was below the government's target of 6 to 7%, it's still the fastest in the Southeast Asia. And this was driven by factors such as commercial activities, public infrastructure spending, and digital financial services. And for this year, roughly expectations for growth are still within the 5 to 6% level. In terms of valuations for the local stock market, as of June 28, or as of the end of the first half, estimated forward PE for the market was around 10.7 times. So in terms of valuations, the market is actually still cheap, as for the past 1.5 years, actually, we're trading close to 2 standard deviations below the historical average PE of 16 times for the Philippine market, and even reaching a low of 9.46 times. So in terms of valuations, this shows that there is still further upside in the equities market as we retrace back to the average PE levels of average historical PE levels. So in terms of fundamentals for the market, so the macro fundamentals for the Philippine market actually remains resilient. And one of the structural drivers for this is our strong OFW remittances. which reached an all-time high last year, amounting to $37.2 billion, up by 3% from the $36.1 billion we saw in 2022. And we still expect remittances to remain healthy as dependence of OFWs will require more funds to cover the higher cost of goods due to the recent high inflation we've experienced. So in terms of the peso, as shown earlier, we have depreciated to close to the 59 peso level, but historically we see some strengthening in the peso, especially in the fourth quarter, and a potential US rate cut may also help strengthen the peso, given that this would also widen our interest rate differential in terms of policy rates. So in terms of our survey with several brokers, they see the local stock market closing the year between the 6,700 to 7,700 level, or at an average of 7,300, with an earnings per share growth of around 5% to 13%. However, their estimates actually have been downgraded compared to a few months prior back. And in terms of GDP growth, in the survey from several brokers, they are forecasting a robust growth for the Philippines of around 5.7% for 2024 and 6.1% for 2025. In terms of inflation, inflation is seen to settle at around the 3.6 to 3.7% level. And in terms of policy rates, I think most of the market players are looking at a total of 100 basis points rate cut in total for 2024 and 2025. And in terms of how many rate cuts are going to be experienced in the year, we still have to wait for the data to see if two rate cuts are even possible for 2024 if we do see inflation continue to trend downward. So to summarize, for the equities market, we continue to see the PSEI to end 2024 with around a possible upside of around 10 to 15%, albeit at a reduced pace given that we are still seeing strong resistance in the market of around 6,900 or 7,000 level. We do expect some headwinds to continue in the early part of the second half due to ongoing inflation concerns, the uncertainty regarding the policy rate outlook, as well as some ongoing geopolitical uncertainties. However, the Philippine economy remains resilient as structural drivers remain intact, mainly higher OFW remittances, growth in the IT BPO sector, and more tourists coming in, as well as stable unemployment rate in the local labor market. All of which should lead to higher consumer spending, which contributes around 70% of our local GDP. Another contributor would be this positive spillover from better global risk sentiment as investors bank on a soft landing for the US economy as it continues to be solid with a tight labor market. All in all, these factors should help sustain foreign inflows at the second half of the year, which should anchor the upward momentum in the equities market moving forward. And in terms of the fixed income side, so we do expect local yields to trend lower in the second half as the central banks, both the Fed and the BSP, will cut their policy rates. So the magnitude and the pace of those rate cuts will be highly dependent on upcoming data such as on inflation, which local inflation tomorrow will be released for June. So everyone should monitor that. And in terms of the yield curve, we do expect the yield curve to steepen given that we do expect short end yields to fall faster versus the long end yields, as short end yields usually react immediately after rate cuts. And that's it for my market review and outlook. Thank you, everyone.
Thank you so much, Reggie, for sharing the 2024 mid-year market outlook. So to our attendees, if you have questions regarding the presentation, feel free to ask in the Q&A of the Zoom panel. So we will answer them later during the live Q&A portion after the presentation. So our second guest speaker is currently the training manager at First Metro Asset Management, Inc. She has 14 years of training and quality assurance experience in the financial services, investment, insurance, and BPO industry. So she is a chartered wealth advisor, a certified by International Federation of Professional Managers, UK and Wealth Management Institute. She is a certified investment solicitor for mutual fund and a graduate of the Trust Operations and Investment Management course by the Trust Institute Foundation of the Philippines. She completed her BS Mathematics degree minor in education at the Polytechnic University of the Philippines. Let's all welcome Ms. Ruth Chaneco.
Hi, Monneth. Good evening. Good evening, everyone. Thank you. So for our participants, I saw that there are some who are new or haven't opened their brokerage account. So this is also a good opportunity for us to listen to our fund manager earlier. So thank you, Reggie, for sharing your insights in the first half of the year and also your outlook for the second half of the year. Now, I'm here to also talk about the First Metro Exchange Traded Funds, the one and only exchange traded fund here in the Philippines. Okay, so first, we also need to find out if FMETF will suit you as an investor. Okay, so some of the things that you need to consider is one, is your intention to trade or invest in stocks? But you also want to diversify into many stock companies. You want to diversify your risk without going through tedious investment analysis. Next is if you want to also trade or invest in the largest and most active companies here in the Philippines, then FMETF is also for you. Next is in terms of investment horizon, you're willing to invest for at least 5 years or you have a long-term investment horizon. And lastly, you are aware that as an asset class, it is also volatile in terms of prices, but you still want to invest passively for potential higher returns. So let me introduce to you the First Metro Philippine Exchange Traded Fund. And FMETF is in fact a mutual fund. Well, as a mutual fund, it pulls capitalization from many investors and invest it in a basket of securities. And this basket of securities is in fact based on the selection of companies in the Philippine Stock Exchange Index. Okay, so we're limited to the 30 companies. The only difference here is when you invest in an FMETF, it's a single trade. However, it allows you to diversify in the 30 companies. And it is one of the most cost-efficient way for you to not only diversify, but also invest in the 30 companies without really monitoring them on a daily basis to adjust the weights or to look at it every 6 months to ensure that you are invested in the PSEI companies. And lastly, it's transparent. You can see the price because it's in essence, it is a stock. You can see the price as it is being traded within the day. And at the end of the day, we also post the net asset value per share of the FMETF. Now, just for those who have heard, I know some of the participants already know what PSEI is, okay? But for the first timers, PSEI is the main index in the Philippine Stock Exchange. Okay? So later on, I will show you the 30 companies composing the PSEI. And in a way, the PSEI tells us it is a gauge of what is happening in the local stock market. Okay, so what we also have a view of what's happening in the Philippines. So in a way, it's also being used as a benchmark, not only here in the country, but also globally. Now, for those who are who probably have heard about it before, it used to be named physics and also PCOM. Okay, so that's a composition. It is revised every 6 months. Okay, so that's the semi-annual. Now, let's look at the Philippine Stock Exchange Index in 1 year. And you probably have seen this earlier in Reggie's slide. And this is the First Metro, the FMETF NAV PS movement. Okay, so it also shows you the price movement in a day. So you're seeing candles. So because number one, it is a stock. Okay, and if you notice, there's not much difference because the main objective of FMETF is to simply track the movement of the Philippine Stock Exchange Index. And if you're wondering how they're doing that, we are simply investing in the same top 30 companies in the Philippine Stock Exchange Index. Currently, its portfolio is at 2.1 billion, and it has a higher volatility compared to our equity mutual funds. Okay, and you will notice here, these are your top 30. These are just ticker symbols and with information also as to the allocation per stock company. Now, you might be wondering, how do we measure that we are accurately tracking the performance of the PSEI, that we are closely monitoring, we are closely following the PSEI? You also can look at the 1-year tracking error of the fund. Ideally, tracking error can tell you the standard deviation, okay, of the difference between the portfolio's returns versus the benchmark returns. Okay, so in a way, lower tracking error, better. Okay, so it's a measure of how closely we follow the benchmark. So lower tracking error, better for the FMETF, the exchange traded fund. And this is the same principle that we apply even for the other index funds. So index mutual funds and index UITF, if these are indexed, you need to look at the tracking error. All right, now, one of the things that Reggie mentioned earlier is that they're looking at ending or PSEI growth of about 10 to 15%. Okay, so this was level yesterday. So we ended at around a little bit higher than this. Okay, so you can see that there's still a positive upside. Okay, depending on the bear case, the base case for the forecast for the PSEI at the end of the year. Okay, so you can see here that just by looking at the PSEI or by looking at the FMETF, you will have a gauge of whether you can invest. Okay, it's right to invest at a certain time to FMETF. Okay, now, another thing that you might be wondering, how do I make money in FMETF? There are two things that you need to remember here. The FMETF is a mutual fund that is traded like a stock. Okay, so you can only buy it through the one of the brokerage like First Metro Securities, our authorized trading participant, and you can also subscribe to it through share creation or redemption. Okay, so when you trade it like a stock, you need to make sure that you also watch the prices. But unlike your small cap companies, your speculative stocks, you might not see a lot of price action in FMETF. Okay. Now, as a mutual fund, you also need to remember that one of the principles of investing in a mutual fund is being able to make money passively. So when you invest in FMETF, you can also choose to stay longer and just look at the 5, 10, 15, 20-year investment horizon, what has happened to the PSEI in the past years. And you will have also a gauge of whether investing passively in our PSEI in FMETF will also generate you profits. Okay, so there you go. It's like investing in a basket of 30 companies in a single trade, and you get to enjoy the overall market performance without buying the stocks individually or actively managing the portfolio. All right. Now you might be wondering, what are the things that I need to also monitor? Okay, so some of the things that Reggie mentioned, I just took 3. And this is for everyone to have an idea on the things that you need to look out when you are investing in the FMETF. So simply put, you need to understand what is going to happen in the PSEI. Okay, so you have there the forecast mentioned earlier by Reggie, and also the means okay, that were indicated by the brokers, the different brokers. Okay, so one thing that you also need to watch is the GDP. So Reggie mentioned that our GDP remains better compared to our ASEAN neighbors. Okay, so in a way, there is some optimism when you invest in FMETF and decide to realize returns at the end of the year. Okay, now, how do we make sure that we understand? Okay, so in principle, assuming that all the other factors constant, okay, no change in anything else, like interest rates, no war, and so on. Your GDP has a direct relationship with the PSEI. Okay, so you can see here the blue line that you are seeing, okay, that is your PSEI movement. And the red line or the red bars that you're seeing here is our GDP or our annual growth rate. And you can see that they move together, right? So that's a direct relationship. Now, what's the point of knowing what's the direction of our GDP? Simply put, a positive GDP or an above expectation GDP at most will bode well for the PSEI and therefore will bode well to your FMETF investment. Okay, so there you go. That's one factor to consider. The next factor that we also need to take from Reggie's presentation earlier is consumer spending. Okay, historically, consumer spending, if you are going to look at the red line here, they would decline in the first 2 quarters of the year, and then they would recover in the third and fourth quarter. But Reggie mentioned that our consumption may temper in the third quarter of the year, okay, unless inflation also becomes controllable. Now, another thing that you also can bench against the PSEI is the consumer spending. Okay, you notice how they move. They also have a direct relationship. Okay, so you can say that consumer spending has a direct relationship with the movements of the PSI. Okay, so lower consumption means also decline in PSEI and higher consumption. Okay, or economic activity can also mean positive for the PSEI. So you also need to watch out for this too on the third and also fourth quarter. Okay, so again, what's the point of knowing consumer spending? If our consumer spending is above expectation, it will also bode well for PSEI and FMETF investment. Okay, now this is just an illustration of our PSEI and consumer spending, okay, for the past 5 years. Okay, there. 10 years, okay? So there you go. It's have a relationship, right? You can see here, no, ups and downs, they also move that way, okay? So one goes up, the other goes up as well, and one goes down, the other goes down as well, okay? Now, just to be clear, this is assuming that all other factors are constant. There are no other changes in the market, okay? So there. And the last one that I want you to also look at is, for those who are wondering, what I did is I use this information from trading economics and also your FMETF charts, okay? So I just put them together. Okay. Last is our inflation and interest rate. Okay, so we know that inflation has a positive relationship with interest rate, right? If our prices goes up, so as our interest rate, of course, okay? But it also has a relationship with the PSEI. In fact, it's the opposite, okay? So what you're seeing on the screen is our inflation in 1 year, okay? And notice that our PSEI moves the other way, okay? So in fact, if you're wondering how does this happen, one of the things that we need to remember is when we have a high inflation, interest rates go up. And therefore, there's no incentive for investors to invest in the stock market. You would rather lock those fixed returns, okay, those coupons, high gains from fixed income instruments. Okay, so therefore, you will see a decline in the Philippine Stock Exchange Index. Okay, so two things that has a correlation. Direct is GDP and consumer spending, but your interest rate and inflation has an opposite effect to the PSEI. Okay, so that's why it's important to to know whether our interest rate will constantly be reduced. There will be rate cuts, okay? And by how much? Those are the factors that would also influence how our PSEI may move in the near term. So just also remember that Reggie mentioned that if there's a rate cut, our market immediately reacts as well. Okay, so you need to put your trader hat here when you are investing in FMETF and you want to make money in a span of less than 1 year or not in the long run or long term. Okay, there. So the yellow line is your PSEI level, and you can see there that the inflation rate began to decline in April, okay, and our interest rate tempered at that point, and you can see a recovery in the PSEI during that period. Okay, now this is just to again assume that all other factors constant. Okay, now this is the last slide, I guess, for the charts, just to show you an illustration that in the long term, you'll really see that they're opposite in terms of relationship, right? So when there is a decline in interest rates, which is inflation, which is your red line, and there's a decline in interest rate, which is your green line, you would see that it also, you could see that during that time, the PSEI level also begins to recover, okay, coming from the 2020. All right, so those are some of the principles that we have discussed. So I hope you watch that out when you begin investing in FMETF. So look out for what's going to happen to the PSEI, and therefore you will have an idea of what's going to happen to your FMETF investment. Okay, so just putting back the slide here, you can actually do this in your trading accounts in FMSec online brokerage account. That's actually what I use. So you just have to put the PSEI and then compare it with your FMETF, okay? And depending on the view of the market, whether we're looking at 6,700, okay, yeah, that's the base, or 7,000, 7,400, you will see that currently, at this point, there's still some room for and returns and also upside, okay? Now, just to also look at the difference in terms of fees, okay? So we understand that this is a stock, okay? So the fees applicable to you is also the fees applied when you are trading a stock, okay? So when you are buying, there is an applicable broker fees of 29 basis points, okay, plus DST, okay, and then if you're selling, okay, there is an applicable 89 bips that includes already the stock transaction tax and other fees for the FMETF, okay, so it's just like you're trading a stock, okay, but the only difference is you don't need to buy each of the 30 individually, okay, so if in fact, if you're wondering, I want to just make my own FMETF portfolio. Okay, how much do I need? So you're seeing on the last column here, if you want to decide to manage your own index portfolio, you need at least ₱1 million. It depends also on the prices of the 30 companies and their minimum board lot. At a minimum, it'll be ₱1 million. Okay? And take note that while you're not paying for management fee, it will also be eating up your time because you have to watch that on a daily basis. And you have to update that every 6 months. Okay, so if the Philippine Stock Exchange Index would list a company from the top 30, then you have to also let go that stock. Okay, so that's an example of a way to manage your own index fund. Okay, now other mutual funds are also index funds. So the only difference is that management fee is lower for FMETF, okay, and there's also applicable entry fee. Lastly, there are holding periods for investing in mutual funds. So if you decide to invest in a mutual fund, but you want liquidity in a year, okay, in 3-6 months, you want to take advantage of the possible price action that Reggie has mentioned earlier, depending on the forecast of PSEI, then FMETF is for you. Now, if you find all of the things that we showed earlier too tedious, okay, you can't watch all of these factors because you have to really look at the charts and in a way do fundamental analysis in the economy, okay? you can also invest by cost averaging. Okay. The only difference here is you can decide to put 1,000 pesos or 2,000 pesos every month. Okay. And you can probably set a price that you want to buy when FMETF is, let's say, 100 pesos. Okay. And you buy 10 shares. So what you're seeing here in the chart is we did some test calculation as to whether timing, meaning you invest at the beginning of the year, okay, and then look at the value or redeem it at the end of the year, versus you just invest on a regular basis every 15th or every 30th of the month, okay? If you notice here, those are the cost averaging, those are the green bars. So there are instances that timing, meaning investing at the beginning of the year and realizing at the end of the year they win, especially in 2017 and also in 2019. But if you look at the other years, such as in 2020, 2021, even 2022, okay, and 2023, the cost averaging will also win. Okay, so it's up for you to decide and look at how do I want. So ask yourself, how do I want to make money from the First Metro Exchange Traded Fund? Okay, and what are the factors that I need to consider or look out, okay, when considering whether I will buy and I will sell the First Metro Exchange Traded Fund? Okay, so there you go. And I hope we learned and have encouraged you to invest in the first and only exchange traded fund here in the Philippines. So that ends my presentation. Again, thank you very much, Monneth and FMS, for giving us the opportunity to discuss FMETF. Okay, so turning over back the floor to you, Monneth.
Thank you so much, Ms. Ruth, for explaining to us the First Metro Exchange Traded Fund. So, but before we move on to the Q&A session, let's give our guest speakers a moment to drink a glass of water and take a quick breather. Because at this time, I'd like to share or take this opportunity to talk about First Metro Exchange Traded Fund investing journey. Okay, so we already have discussed market outlook. Hold it, will not lose it. Yes. So we have already discussed market outlook and now how will you start your investment in FMETF? So well, in FirstMetroSec, you only need one account for all of your investment needs. So pwede nyo pong ma-access ang inyong portfolio using desktop, laptop, tablets, and even your mobile phones. So you can invest in stocks, real estate investment trust, mutual fund, UITF, and exchange traded fund. So once you have a FirstMetroSec account, you can actually access it via website or via FirstMetroSec Go app. So for navigation purposes, I have this example through our website. So once you have a FirstMetroSec account na activated na, you just need to click the trade tab and then toggle buy, indicate the ticker code for FMETF, and then indicate the amount and as well as the price. So you can see here as well the total traded amount that you need to pay, including the charges. So as to the breakdown of the charges, it's 0.295% when you buy, and when you sell, it's 0.895%. So total is 1.19%. And once you have decided and confirmed that you will buy the FMETF, minimum of 10 shares, you just click buy and then key in your password again. So here I think that Ms. Ruth already shared about the peso cost averaging strategy. So invest regularly every month, 1,000 or 2,000 per month. You set aside certain amount of money. So just to share, if you invested in a very low cost index fund where you don't put all the money in one, but on the average, in over 10 years, you'll do better than 90% of people who started investing at the same time. So let me just have this comparison between two investors. We have Paul and Mark. So Paul here started today. So he has this 30 years of investing journey, whereas Mark started 10 years after. So 20 years na lang yung investing journey niya. So a total of 540,000 investment for Paul, whereas Mark 720,000. But in the total return on investment, actually Paul got the highest amount at 2.1, while Mark at 1.7. So this is based on the average growth rate of 8%. So here, this is better when you invest longer, so you can maximize your return on investment. Next slide is actually an opportunity for you to implement the peso cost averaging effectively without you really investing manually on a monthly basis. So for as low as 1,500 pesos once or twice a month, perhaps on your payday, you can set aside those amounts. So you just need to enroll in the voluntary investment program. So once you are already enrolled, you just make sure that every 15th or 30th of the month, your FirstMetroSec account is funded with a 1,500 minimum investment for voluntary investment program, because it will automatically purchase FMETF monthly or twice a month. So there is no need for you to manually do it. And for those who don't have a FirstMetroSec account, so I have seen one of the participants now without a FirstMetroSec account, you just need to open a FirstMetroSec account via Play Store when you download FirstMetroSec Go application, or via website at www.firstmetrosec.com.ph, and prepare your requirements such as tax identification number, government issued ID, proof of residence, and proof of bank account, and initial deposit of 1,000 pesos only. So let me just share the account opening procedure. Hold on for a second.
Trading on the go? Here's FirstMetroSec Go for you. Easily open your account today with this app. You can download the FirstMetroSec Go app through Play Store or App Store for free. If you already have it on your device, simply open the app and click Sign Up Now. Next, you need to create a user ID, read and agree to the terms, and provide these information. Once you're done, click the link on the email verification sent. Now, let's complete your account application. First, input your account information. Then, provide your user information. Next, accomplish the investor profile form. Almost there! Read and agree to the terms and conditions. Then click Agree. You will then receive your reference number through the app. Don't forget to save this number because you will need it for your initial deposit. Next, upload or take a photo of these requirements. 1 valid ID, 3 signatures on a piece of white paper, proof of address, and proof of bank account. If you're self-employed, there are additional requirements. Now let's fund your account. You can make your initial deposit through bills payment, online fund transfer, over-the-counter deposit, or remittance. The minimum 5,000 pesos or $100 can be used to invest in stocks, funds, and bonds. There is no maintaining balance required. Next, you will need to verify your identity. Simply take a photo of your ID and take a selfie. You're all set. An email confirmation will be sent to you in 2 to 3 business days. Happy trading! For more information, visit our help center at help.firstmetrosec.com.ph. All the options and convenience within your reach through International Finance's best online broker and best online.
Sorry about that. Yeah, there. So for you to open a FirstMetroSec account, you just need to download FirstMetroSec Go application or visit www.firstmetrosec.com.ph. There. So feel free to connect with us. Our main website is www.firstmetrosec.com.ph. In social medias, just search at FirstMetroSec. So for our account requests, updates, access concerns, email customer service at firstmetrosec.com.ph. And lastly, for customized, gamified, award-winning market education programs exclusively designed for your company, school, or organization, just send us a formal invite at marketeducation@firstmetrosec.com.ph. And at this juncture, may I once again call our speakers to turn on their mic and camera as we accommodate any questions you may have. So simply write them on the Q&A of the Zoom panel. So hi there, Miss Ruth and Reggie. We have this one question, but I think I have already shown this, the answer rather. So FMETF, the daily trading volume is not big, and so liquidity is not big. If we want to sell my FMETF, could you advise how and where can we trade it? So once you have a FirstMetroSec account, so again, you just need to click the trade tab and then indicate the ticker code FMETF, indicate the amount and volume of FMETF, and click submit when you are going to sell FMETF. So let me check any other question. So here we have, we'll just take last two questions. How are geopolitical factors and global market trends likely to influence the Philippine market outlook? Could we have Reggie?
So far, geopolitical tensions, like including the tensions in the West Philippine Sea, the ongoing Israel-Hamas conflict, as well as the Russia-Ukraine conflict, which has been ongoing since last year. These are all actually negative for not only the Philippine market, but the global market in general, given that any war naman or any conflicts, diba, will hamper growth in the different countries. So, knock on wood, we do hope that these conflicts do not escalate any further. I think there has been a published report yesterday that both the Philippines and China have agreements or talks that they are looking to de-escalate the tensions in the West Philippine Sea. So that should remove one of the uncertainties in our local market. So in terms of conflicts, we don't want that. Right? We don't want war. We just we want economic growth. We want prosperity. Diba? So for a better market.
Agreed. So thank you for that, Reggie. Next question for Miss Ruth. Okay, so we have this. What strategies and considerations should investor keep in mind when incorporating the FirstMetro Exchange Traded Fund in their portfolio?
Thanks, Monneth. Number one that they need to consider is that how long they're willing to invest in FMETF. What's the objective? Are they is the objective to realize returns in a short period, or do they want to cost average invest for a longer period? Okay, but at the end of the day, it's still buy low, sell high. Okay, the main difference lang is that you need to closely watch PSEI if you want to make gains and take advantage of the price actions in a short span. I think if you just look at the charts, the 1 year historical of the charts, there are ways to make money even in less than 1 year. But for those who do not understand charts, its correlation to the topics we shared, Reggie shared earlier, GDP, consumer spending, and then inverse relationship with inflation, interest rate, even other factors that he mentioned, like our currency. Okay, so if you're not really familiar on those things, then we encourage na as a strategy, why not make money from active trading? And then those money that you make, you put it passively in a portfolio. The only difference there is you're still buying a stock, but you don't need to do a thorough fundamental analysis. Okay, so you don't need to be Reggie. Reggie has done a lot of studies, okay, and he is a CFA. And it's really hard to be like Reggie, okay, as we know it. And therefore, investing in FMETF passively can also be a strategy for you. So there, thank you, Monneth.
Yes, thank you, Ms. Ruth. So it really depends upon the investor if he or she prefers active investing or just passively investing. So that sums up our Q&A portion. Thank you so much for all of your questions. And of course, thank you very much to our guest speakers for gamely answering them. So to all our attendees, they're flashing already. We also value your feedback, so you can share your thoughts and experiences with us by scanning the QR code and answer our feedback form. So link will also be provided by our chat moderator later. So your input is essential in helping us improve our services and better meet your needs. So we appreciate your contribution and we look forward to implementing positive changes based on your valuable feedback. So again, thank you so much, Reggie and Ms. Ruth, and we look forward to our next collaboration as we continue to serve the Filipino investors. So perhaps you have some parting words for our audience before we formally close this event. Let's start with Ms. Ruth.
Yeah, for me, just do it. Okay, Nike. No, not endorsing. So just do it. Okay. So the good thing about FMETF is it's a stock in a mutual fund. So when you invest in a mutual fund, you get to invest there passively. Like leave it there, okay, for long term. However, if you decide like no, this is not for me, then you can actually sell it. There's no holding period for FMETF. That's its main difference with the rest of the mutual funds. So from the term exchange traded fund, you get to buy it in a stock exchange. Okay, so you trade it in a stock exchange. That's how you get access to FMETF. Okay, so there you go.
Okay, thank you so much, Ms. Ruth. How about you, Reggie?
So apologies for those who got confused in my presentation, but the gist of my outlook earlier was that even though we've experienced some challenges or headwinds in the first quarter, mainly as you've seen, the prices of commodities like our rice, our goods in the groceries has been elevated in the past few months. So we do expect this to go down. So in terms of and especially when the BSP cut policy rate, this would also be good for not only for the market but for us in general, since this will also lower our interest rates in our loans, so our borrowing costs will actually be lower. So in terms of these better prospects, this will actually be good not only for our daily lives but also the stock market in general. So as Ruth said, given that we have a positive outlook in terms of our economy, in terms of what will happen in the market moving forward, just do it, just invest, and then your savings will grow together with the economy. So happy investing.
Thank you so much, Reggie. So there you have it, guys. Once again, on behalf of First Metro Securities Brokerage Corporation, I would like to express my deepest gratitude to Reggie and Ms. Ruth of First Metro Asset Management for gracing us with their time and presence. So it is truly an evening well spent. Thank you also to everyone who attended tonight. We sincerely hope you learned a lot and that these insights and lessons will make your investment journey not just more profitable, but also more enjoyable. So please don't forget to provide feedback for today's webinar. And we hope to see you again on our future learning events, because over here at First Metro Securities, we put your future first. Have a great evening, everyone. Thank you, Reggie, and thank you, Ms. Ruth. Bye po.
Take care, everyone. Have a good night.